Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber. Thursday, May 12th, 5:14 p.m. New York time. Good afternoon. Gonna show you some history. Gonna school you. Remember that word school. You're gonna get schooled. A lot of wise information I'm gonna share with you for long-term investing in the history of the markets. And maybe you're come away watching with this video and understanding what you should have done weeks ago, months ago, today, tomorrow. S&P 500, symbol SPX, monthly charts. Zoom in, the high of January. Since then, we trended down, lower low. Huge consolidation here, these 3 monthly candles. Zoom out a little bit. Fibonacci, have you ever heard of Fibonacci? It's all around you. Enough said about that. Go read about it, it's amazing. I drew Fibonacci from the bottom of here to the high of there. See this blue line? That's a 0.618. And the green, 0.382. The middle one is not a Fibonacci number. But again, the 0.382 and 0.618 are Fibonacci numbers I'm using from this trend. This trend up, we did a retracement. That retracement came to the 0.382. Yep, we had a lot of consolidation and the huge wicks on the bottom. Buyers are stepping in. Third month, this third red candle bar, bad. It broke below it and closed below it. Now it's gunning down to nearly the 0.618, the blue horizontal line. What that means is when you have a retracement that deep, I'll zoom in a little bit, that retracement that deep, that typically means any bounce or retracement back to the upside, higher probability that it would not break this high. Got it? So if you're still invested in the markets, and if we have a retracement bounce to the upside, I would consider taking what you have in gains, profits, and closing those positions. Yep, get out of them. Could have done it several weeks ago, several months ago. I've been sharing this information. If you didn't understand it, shame on you not asking me. We don't know what we don't know, be honest. So that being said here, let's go on to the next. NASDAQ 100, new low for the year as well too. Dow Jones, new low for the year. Dow Transports, new low for the year. Dow Utilities stocks pay dividends. Why do people buy these stocks? Because again, they're going to earn income. That does not mean the stock market's not going to go lower in this index. It did, it's going lower, but it's not at the low of the year. That's good. This index is the strongest index right now. I just showed you, remember that. And the Russell 2000, new low for the year, bad. All right, now I'm going to school you what's very important. Enlighten a lot of people here. History. We're going to put this to the max. Start thinking back. What year were you born? When's the first time you started to have an interest in the market? And what bad events occurred? And how do things go? We're going to get schooled. So here, 1986, coming to 1989, coming into 1990, rapid technology growth, computers, internet, Lots of technology. Market was going higher. Then here, 1990, the Gulf War, the first Gulf War, market sold off. Correlation here, crude oil was at all-time high when this happened. Remember that there's a correlation. Wars typically make energy costs higher. Let's go forward. The following year, we recovered and broke above that high. That's good. It did take several months, a lot of months, but it didn't take years. It just took several months. Okay. Going forward. Rapid growth again from 1990, 92, 93, 94. Look at these rapid highs. Markets getting more and more green and very strong trend to the upside. A lot of vertical. Is it sustainable? Not really. Yep. 1996, 1997. Again, think what's happening around these years. Okay, we're getting closer. 1999, the year 1999, the big fear to Western nations was the YK2 bug. Remember that? That was a fear that the technology of computer systems were not going to be able to compensate for the change of the year 2000. Again, a lot of technology was being pushed out to people to buy to get the most modern technology that may not have the issue. YK2 bug. It happens on January 1st. Yep, there we go, getting closer. Okay, the last month of December, huge push to the new time high. And the first month of January, made a higher high, higher low. Things were not as bad as expected. Nope, still pushing high. What else happens coming into this year of 2000? History. Hit an all-time high right there. So the third month of 2000, all-time high. Yep, huge tail on the top. History. The dot-com bubble. Big event. Why? Huge whipsaw. Huge, unbelievable whipsaw. Let's go forward. Market selling off. End of the year, took out all the gains for that whole year. Understand? All the gains. Going forward, that following year, 2001, continued going lower, lower. This was the low of 1999. So understand, 1999 here, the third month of 2001, we already broke that low. All these gains were given back. A lot of new investors came into the market at that point, a lot. Let's go forward. Continuation problems. 2001, September 11th. Yep. Also has another name some people know, refer to it as. 9/11. Again, new lows, not good. Again, that was the high of 2000. Haven't done any big retracement yet. So again, if you bought 1999, 2000, and we're still doing dollar cost average, or just say you stopped investing there, regardless, either way, there has been no recovery yet in this index. Why did people think it was time to buy? It's still going lower, still going lower. Again, there's certain sectors or financial instruments you can invest in, but these particular sectors of the stock market were not the correct ones. Let's go forward. Okay, here, 2002, this was the low, the dot-com bubble. Wow, 1, 2, nearly 3 years, yeah. So if you were doing dollar cost averaging here on a decline, that's not the best thing. Doing dollar cost average to the upside, locking in profits and turning them out, locking in gains and closing them for profits, that's what you do. You don't just sit on them, no. going forward. Again, let's zoom out a little bit more so you can start seeing some good stuff. So now, as we're getting smaller trading ranges going forward, coming into 2007, 2008, what starts occurring? Yep, that history in 2008. Man-made events. The U.S. housing, United States housing bubble, huge sell-off, huge volatility. There were signs prior to it happening, but we didn't take out that low of 2002. That's good. Very good. Let's go forward. Do you notice something yet? We still have not recovered from that high of 2000. And yeah, now we're into 2009, 2010. Here it's coming 2011. Yep, everybody that was buying into that high to 1999 and 2000, we still have not recovered to that. That's a long time being underwater. Let's continue going. So fast recovery started, not here, not at the lows. Nope. What's here? This housing bubble was another huge flush. I share that with some people. We're going to have a huge flush. Don't know what day it's going to occur, but we still expect it. And after that huge flush, policies change. Yep, a lot of things changed. Again, should have been done a long time ago. Okay, so coming here, look at this, 2000, and coming here. Yep, history. Right here. 2016, the year 2016. Let me zoom out. Took 16 years to get above the high of 2000. That's terrible. 16 years. That's not good if that was your long-term investment portfolio. And that was just the one index I'm showing you on the NASDAQ 100. Plenty of individual companies never made it. So the point is, the NASDAQ was the slowest one to recover, took the longest to recover. And now we have this huge sell-off. I'm going to zoom in. Huge sell-off. And we know the biggest sell-off right now of all these indexes I've been showing you, you can see my past videos, I've been saying was the NASDAQ 100. So if you're looking to buy long-term investments, I personally do not see it being the NASDAQ 100 yet. Nope. And if you were to buy here, continue going lower, as I expected to continue going lower. Again, we may have a retracement. Don't be surprised. But on the monthly time frame, it's not showing that. Okay, let's take this to the faster time frame. The monthly, let's go down to the weekly. This is how people get fooled. They look at maybe 1 or 2 time frames. So now the weekly still trending down. Let's go to the daily. There we go. The daily green candle today. Everything must be okay. We are saved. Been resurrected. Start buying. Wrong answer. Wrong answer. Let's go into these sectors, S&P 500 sectors. Some of them are doing better than those overall indexes I just showed you. You could buy these stock ETFs. If you don't have access to stock ETFs and only have 401k or IRA where you're doing mutual funds, well, there's mutual funds that are in industries, and you could ask living, breathing people in those companies, which ones are similar to these indexes that's doing best. So let me show you the indexes. You determine which one's doing the best, and you can look for which ones. If you don't want to do the indexes, well, then those indexes have stocks in them. You can research which stocks are in them, which ones are doing the best. First, XLK, technology, just like the NASDAQ 100, it's terrible, not good. XLV, healthcare, look at this, take note. It has not taken out the low of the year. That's good. That's very good. XLV, X-Ray Lima Victor, I'll be writing this down right now and looking into this stock ETF as well as the stocks in here. If you're going to buy single stocks, you find the best ones in here. If not, then you could consider doing the index if that's your plan. XLF, terrible. It's the financials. Yeah, it's going to get worse for them. XLY, yep, terrible. New low for the year. XLC, new low for the year, terrible. XLI, new low for the year, terrible. Again, a lot of them are terrible, but you already saw which ones are leadership. XLP, very nice. It's not a new high, but it's not taking out the lows. X-ray Lima Papa. So you already see 2 stock ETFs in the 11 sectors that are the better ones. XLE, outstanding. This current month, all-time new high. X-ray Lima Echo, outstanding. That's 3 now you see. And you saw this is the best one right now. X-ray Lima Uniform. Yep. Red. But again, didn't take out the low. They're not the prettiest ones on the dance floor, but they're not the worst performers. XLRE, all-time new low for the year, bad. XLB, look at that, near the low of the year. There's better ones than this. And that was the 11 sectors. Let's go finish this off with FANG. What's FANG? FANG Plus. FANG Plus are the stocks that are the most heavily traded, and they represent the largest percentage in the stock indexes. Let's see their performance. Apple, again, when I'm talking about single stocks, this is another reason I would say focus more on the stock ETFs of the 11 sectors than the single stocks. Apple, new low for the year, not good. Microsoft, new low for the year. Amazon, new low for the year and broke a key level. One would expect they're going lower. Facebook, look at that inside candle for the month. It hasn't taken out the low. So it's doing better than the other ones I just showed you for the single stocks. Google, new low for the year, not good. Tesla, yeah, it made a new low for the year, not good. November Victor Delta Alpha, new low for the year. Netflix, new low for the year. Okay, let me show you another one. Disney, new low for the year, not good. Bravo Alpha, Alibaba. Now I've been mentioning this for on and off several months, that it was showing signs of accumulation. So we did not take out the low for the year. But again, back here, I was thinking it was turning as a potential buy and some trade ideas to take. And then just like the overall market, it broke, went lower, but it hasn't taken out the lows. So it's stronger. Again, Chinese company stronger than most of these other ones. That's good. Okay. Many thanks for watching, and stay tuned because I'll be making more.